Thanks for joining us. I'm Marlin Bohling. As we take another look at our market activity early in the week, we are off and running, as we said earlier, and things getting established now in the daytime session. Here to help us take a look at the markets, we turn in studio to our guest, Mr. Chris Swift. How are you?
Doing great, Marlon. How are you this morning?
Doing fine.
Good.
Chris is with Swift Trading Incorporated, and he's based in Nashville. So I wanted to ask you about the grain trade. We got it off and running earlier, and everything lower except for the cotton. Now, cotton was higher. But the corn, soybeans, the wheat, all of them were under pressure today. What, in your opinion, is behind that?
I really don't know, because I know that they had some weather issues that came about in the Iowa area, Nebraska area this weekend. It brought in some more rain. The wheat tour went pretty as bad as what they thought. About 50% of the Kansas wheat crop gone. So how they can continue to trade lower like this, I'm not real sure, but it all has to do with the ending stocks from last year and the big carryouts that we're still having to deal with.
Now, right now, I'm seeing soybean losses in double digits today to get the week off here. With that in mind, how much of that is related to the fact that we have not really had a big announcement from the Chinese trade talks? There was a rumor, Thursday before the close that maybe there would be something announced Thursday night, and the market went double digits higher right before the close.
Right.
And then they gave it all back, and now we're taking back more than even that now because we haven't heard much. How flexible is the market in regard to that China news? I mean, is it just going to be very skeptical of anything now, or what?
Well, I think it probably just needs something to trade off of, and that is something for it to trade off of. It's clearly been stuck in this 35, 40 cent range for the last month now.
Right.
So until we can find something more exhilarating than something with Chinese news or the planting delays, then it's going to take something bigger. And I think what it'll probably end up being is soybean meal. Soybean meal continues to move higher, and we continue to increase our livestock production. So,
all right, well, let's go ahead and take a look at our current prices on the board, and let's go to Chicago, look at corn first. Down 4 3/4 on July. We're at 401.5 right now, just one tick from our low of the day. December down 4.5 at 416.5. Same story there. In the soybean trade that we were just talking about here, July soybeans now down 14 at 10.22 3/4, within a half cent of our low of the day. We have November down 10 3/4 at 10.26.5. If we have the soy meal, I wanted to bring that up as well. A lot of pressure, like Chris was talking about. Let's look at July, which is down $7.70 at 386 even per ton. How about the wheat trade? Well, in Chicago wheat, we have July currently down 12 1/4 now at 514. Overnight, I think it was down, 8 or 9, if I recall. Looking at Kansas City wheat here this morning, we have the July contract. Wow, down 13.5 at 542 1/4. And that's well off our earlier overnight high by 11.5 cents. Meanwhile, Minneapolis wheat, we have the July contract there trading 11 lower at 612. There isn't anybody in a good mood in the wheat trade.
Obviously not today.
What happened after that tour? Anyway?
I really don't have any idea. Expectations, it came out as expected as bad, and they probably had a lot of that already built into the market. And although we closed Thursday, Friday right up on the highs for the week, now we probably give some of those back in a small correction. But it tells you the direction wheat's going to probably continue to head, and that's higher because we're just not going to produce the amount of wheat this year that we did in years past.
We had one agronomy expert tell us last week. They said, all right, so what they come away with on the tour would be as good as it gets.
Yes.
And they said if it turns off hot and dry, and they were talking in June, if it turns off hot and dry, that could really sap the yield out of that wheat if it wouldn't feel right in the heat. Well, here it is in the hundreds already this week.
That's very true.
And yet the market not going up. That's kind of odd, isn't it?
It is. It is. And, of course, I know that they said that a lot of wheat had been, cattle had already been turned out on it. So those particular wheat pastures are never going to come to a head. So.
Okay. I do want to take a look at the cotton market here, too. That one is going the other way this morning. And right now, it's hanging on to gains, but they have come off of their earlier highs by quite a bit. July cotton up 27 at 87.17, almost 100 points off of its earlier high. We have the December up 38 at 80.95 per pound. We'll come back in just a moment, and we'll take another look at our livestock trade this time around with Chris Swift when we come back. Welcome back. Let's take a look at our livestock trade and take a look first at our live cattle board in Chicago. Right now, you have the market under pressure. We have the June down 67. We're at 105.38. The August down 80 at 104.28. October down 97 at 107.48. Let's look at the feeder cattle trade, and as we are getting deeper into this 9 o'clock hour Central Time here, we have the May feeders currently down $1.42 at 138.98, so we're under 139 now. We have August down $1.50 at 144.82. And September down $1.26 right now at 145.52. Let's turn back to Chris Swift of Swift Trading and get his thoughts on this. A little weakness in the cattle trade. Did you expect that?
No, I really didn't. I spent the weekend in Panama City Beach this weekend and saw discretionary spending phenomenal. I mean, it was just incredible. The price of the motorcycles and the rigs that they were in and the money that they were spending is a really good economic sign. And then we came out last week with the unemployment report, now showing a 3 handle at 3.9%.
Right.
So we clearly have the demand out there. We have got the consumer with an elevated amount of discretionary spending, and I believe that's going to continue and show through. Of course, we do have elevated inventory as well to have to work through, and that's making for some big conflicts between what the price of beef is today and what they think it'll be in 6 weeks from now.
Okay, we had cash cattle trade last Friday around 125, I believe.
Correct.
And if we can bring back that live cattle board here, let's take another look at that again. The nearby June at 105, Chris, 105.42. That just screams the question, how can that be $20 apart like that? That has to come together, doesn't it?
It does, and it will, and it makes it very difficult because you can't go in there and sell cattle on the June board at 106 and try to find them anywhere for cheaper than that to deliver against a 106 board. So it will come together. How it comes together will be the most interesting section, and all we can really assume right now is that futures rally a little bit, cash comes down a little bit, and they meet somewhere in the middle.
So how do producers handle that now?
I think they forward contract as much inventory as they can while the packer is still offering a 22, 21, 3 and 4 week out forward contract, and then buy the board. You're arbitrarily selling cash and buying futures at a $20 spread. That's not a bad way to handle things.
It's almost like free money, right?
No, it's not like that.
It doesn't seem logical.
It does not seem logical, but it will be interesting, and it won't be easy. It won't be as easy as what you think it will be. There will be tremendous amounts of fluctuation.
So what about
in
options?
There. Options are so short-dated right now that I don't think they would give you much opportunity.
You don't?
You're looking at a $20 spread, so if the futures goes up 10, and by the time you pay $2 or $3 for an option premium, and then you're not right at the bottom, that's really not a lot of price fluctuation to try to profit from.
All right, let's look at the lean hog trade here and get you updated on the lean hog prices. Boy, May down 58, but June holding steady at 73.52, and July down 28 at 75.30 right now, so kind of caught in the middle. A little negative pressure there, too. All right, thank you, Chris. Appreciate
Absolutely.
it very much. Chris Swift of Swift Trading Incorporated in Nashville.
All right.